Welcome everybody, my name is Josh. I'm with Cardano Chats, where we introduce you to various projects and applications that are being built on the Cardano network. This is brought to you by Grow Your Stake. So if you want to support us, just go over to your Daedalus or your Yoroi wallet and type in GYS and delegate your stake there. Today we are incredibly excited to bring a conversation with you with Dewayne Cameron, who has started the very first decentralized finance application on Cardano called Liqwid Finance. Everybody, welcome. Today I'm really excited to introduce Dewayne Cameron from Liqwid Finance. That's liquid.finance, Liqwid.finance. He's here with one of the very first DeFi projects on Cardano blockchain. So it's very exciting. If you've been following anything of what's been happening in the DeFi space, there's a lot happening there and a lot of problems and issues in the existing ecosystem. And Dewayne is here to tell us a little bit about what his solution looks like. I'm super pumped to have that. I don't think there could be, honestly, man, I'm pretty jealous. I think you've got a tremendous combination of events occurring for you right now, Dewayne, that just positions you uniquely for, I think, tremendous success. You've got the best blockchain out there to launch your platform on, and then you've also got this DeFi craze that's happening, and all of that is aligned so incredibly well with Cardano's mission, which is bringing economic identity to the billions of people around the world that don't have it, specifically in Africa as well. And so I'm excited to have you on, man. Welcome.
Thanks for having me, Josh. I appreciate it, man. Yeah, absolutely. Definitely exciting time for the whole Cardano community. So many developments coming on that side of things. You look at the native assets rolling out. You look at what that means for, not only projects, but also stake pool operators and the way fees get handled on Cardano, and being able to kind of pay in the native actual token, the transaction fee, and what that will do for opening up really entire business models on Cardano. And that all kicks off on Monday. So it's definitely a really exciting time for this whole community. And
yeah, it's crazy. I mean, my phone has been blowing up all day today since I've got a community of people that we meet up here in Austin around Cardano, and they're all excited about what's happened with the price just today and what's happening with the project overall. But I mean, it's an amazing time without a doubt. And I bet you're super pumped. So I'm curious, like, what is your background? How'd you get into crypto? Sure. And then I want to get into a little bit more about your project.
Yeah, absolutely. So my background is in consulting, I guess management consulting. I spent the last 3 years working on large scale software implementations, business analysis, some financial management, financial analysis projects as well, mostly in the public sector, state, local, federal level. Right now I'm working on a large state of New York software implementation essentially. And that's been an ongoing project that will probably, take a whole 3 to 4 years to fully implement and launch. And these are, some of the type of basic implementations that we work on. I did business school before that, went to Durham University, Northern England, studied finance, went down the whole crypto rabbit hole down, and came out a full Cardano bull. And
yeah, oh, nice. Well, I want to hear more about that for sure.
Yeah, absolutely.
So, okay, you're in the DeFi space, which for anyone that's new watching, hasn't been following, that's decentralized finance. You've got centralized finance, you've got decentralized finance. Decentralized finance is brought about through crypto and through what's happening because of blockchain technology. And so we have Dewayne here to talk to us a little bit about that. If you could explain DeFi as if I was 5 or maybe not 5, but just as basically as you can, what is it?
Yeah, sure. I like the LE5 concept. I think that's a great thing, especially for technical concepts like this.
Yeah,
essentially, I think DeFi is everything you would do with a bank without actually going to or using a bank, just using some software that's on your phone, right? Like, the same way I download a mobile app, I should be able to, the same way I download a Yoroi, mobile app and can like save my crypto in there, I should be able to download a Liqwid mobile app and be able to, do my DeFi in there. And what is doing my DeFi? That's everything I would do at a bank. That's doing lending, that's doing savings, borrowing, right? Like all of these kind of basic core functionalities that we typically rely on banks or other, fintech financial institutions to play out for us.
Yep.
You can now do with DeFi, and you're right, you're using blockchains, but specifically you're using smart contracts to custody the assets, to automate the transaction and the logic embedded in it. So if I sign a contract with you, let's say, I'm renting your apartment, for instance, right? Like DeFi is being able to put that contract on the blockchain, right? So everyone can see that the terms of my lease, of my renting agreement are set to, I pay 1,000 USD per month for the next 12 months. And, any disputes that arise, everyone can see what this thing is and when it went on the blockchain, where it is now, right? Like, to me,
Right.
anything dealing with finance, but done on a blockchain in a decentralized way by using smart contracts, to me, that's DeFi.
Yeah, and you're eliminating the intermediary costs by doing that, right? So there's a significant amount of efficiencies created by
100%.
taking that out of the equation. And I guess manipulation, government, like the monetary policy, all of the different elements that come into play when you've got central bankers, fees, et cetera. So that's great. That's a really good explanation. I appreciate that. So knowing that, now we've got our base, what is Liqwid Finance and who is it for?
Yeah, so Liqwid is an open source liquidity protocol, and its use case is built around lending specifically. So Liqwid is for anyone who owns ADA and wants to use that ADA as collateral to maybe open a loan in some US dollar. Use cases like for stake pool operators or developers who are in the Cardano ecosystem, don't want to create taxable events, but want to leverage their ADA holdings to maybe earn some yield. Maybe go longer on a different project or token they're bullish on, but do it in a safe way. So, taking on leverage using a stable coin instead of, having to use a volatile crypto, things like that. That really is the base of what Liqwid is trying to be. And essentially it's anyone who needs a lending or a borrowing service in a decentralized way, where you're not actually trusting a centralized middleman with your private keys. Instead, you're giving custody of your assets to a smart contract with logic embedded that's on the blockchain that you can verify, before you ever enter that contract itself.
Okay, yeah, makes sense. And so is it anything like, I've seen quite a few platforms out there, Aave, Compound, there's a lot, Yearn or Yearn, I'm not sure how you pronounce it, but that all of those where you can basically stake a coin or yield farm a coin, you place it into a smart contract and you earn interest on that because it's people are able to borrow against it, or
it's a peer-to-peer. Exactly, it's a peer-to-peer model essentially. So the way Liqwid or any of these open source liquidity systems are working essentially is I'm depositing my ADA, my Bitcoin into a pooled contract that many other users or liquidity providers can also deposit their funds and assets into. Now, on the borrow side, a user has to come along and collateralize some amount, and then they can actually borrow against that amount, right? So the way it works in all of these systems, like you said, Aave, Compound, Yearn, Liqwid, when we go live, right? Like you can be a lender in the system, right? Or what we call suppliers, or you can be a lender and a borrower, right? At the same time. You can never just be a borrower in any of these systems, because that would be like, kind of under collateralized 0% collateral lending type of app. And that's like not something that's really gone mainstream yet.
Sure.
On Ethereum for many issues and kind of reasons, but for all of these kind of at scale DeFi protocols that are in existence today, you're either a supplier or a supplier and a borrower at the same time. And the way that the over collateral mechanics work of these systems, that's essentially how that is always like a mandate before you can ever borrow assets in the protocol.
Right. So I imagine that's a great point. I imagine there's a lot of people interested in learning a little bit more about your token. And if you don't mind, just tell us a little bit about that. Is it the LQF or?
It's actually LQ.
LQ. Okay.
Yeah.
Gotcha.
And LQ is the Liquid Governance Token. It's used to upgrade the protocol. It would be basically the voting token in our system that any updates to the system, any parameters or changes to the smart contracts that govern, say, a change to the revenue model of the protocol to maybe introduce a different rate of the actual pool reserve for a certain market. So each market, say it takes a 10% actual cut of the per block interest paid by borrowers into the pool's reserve. That amount could be 10%. A proposal could come along from a user who has enough LQ to introduce it to make that higher or less. They could, introduce an analysis and kind of a complete reasoning why they think that the pool reserves need to be, higher or lower. It could be dependent on things like the volume of that pool, how utilized it is at a given time, any of those dynamics. And then a vote can take place, right? And any of these parameters that would change any part of the system or protocol would have to flow through governance. And that all works by using the LQ governance token. It's essentially a 1-for-1, the same way ADA on Project Catalyst kind of determines your voting power.
Sure.
Within the Liquid's governance module, LQ
Okay.
is what's used to determine voting power.
Okay. And so I heard something that I think is incredibly exciting. I don't know if this is true. I just want to verify it, but I believe I also read it in on your site. Is it possible to take staked ADA and then yield farm it for LQ tokens?
Yeah, so this is an exciting question. And the answer is we're still in the it depends exploration phase. Theoretically, yes, it is. It has several things to do with the way Cardano staking actually works, meaning you don't actually lock ADA when you stake it in staking pools. Rather, you're delegating it using your staking address. So you're basically signing a transaction body with your staking address that's allowing your stake to be used by that pool in actually the staking protocol. So what you can essentially do is take the unborrowed ADA. So each of these markets has a utilization ratio, which is basically a function that's combining the amount of supply and the amount of borrow, right? So if I have a really low utilization ratio, that means many people have supplied, but not many have borrowed at all usually.
Right.
If I have a very high utilization ratio, I'm almost near 1-to-1 in terms of how much I have on the supply side and how much is borrowed. So meaning not many new people can take out loans when the utilization is very high, and the rates are usually much higher, right? When the utilization is higher, right?
Right.
So if I have a low utilization, the way Compound and Aave do for ETH, because not many traders want to denominate loans in actual, cryptos like ETH or BTC because they're just too volatile. They'd rather use Tether or US dollar coin or some stable coin, right? Sigma US dollar, for example. You would actually want a system to be created where you don't have to rely so much on, you don't have to rely at all on using non-stable coins in your system to do borrowing.
Sure.
So you never want to have a situation where you have a bunch of ADA on your system that's not being utilized at all and it's not earning any yield, right?
Right.
You want to create a system where, yes, stable coins are the most borrowed thing in your market, but what do you do with all of this ADA that's just sitting on the utilization side? And wouldn't it be really cool if you have all of this unborrowed ADA that can also be staked in the staking pools that they entered in? And unless that ADA becomes borrowed, so unless a user comes along, actually collateralizes a position in stablecoin ADA.
And then they lose the staking at that point, right? I would imagine.
Exactly. They give up their staking rate, but they're getting in return a much higher per block interest that user is paying off on that loan, right?
Sure.
And that's kind of how the mechanics of that would work. It definitely is reliant on some things with how Plutus actually is going to interact with the staking keys, and how Plutus smart contracts specifically will be able to kind of manage the staking keys and those wallets for things like delegating. And we're still definitely in the exploration phase with IOHK. The good news is that we're building our entire system on Plutus, and we just hired our first full team of Haskell devs who are going to work with us and basically implement all Plutus smart contracts for the protocol.
That's great.
So if we can explore this in depth before we launch, sometime in June, that's certainly what we're going to be looking to do and working alongside IOHK to try to find a solution for this. But
well, that would be huge, man. Really huge. Have you been able to, I put myself in Hoskinson's shoes or IOHK and Cardano, knowing that this is the very first DeFi platform on Cardano. I feel like they would want to support and ensure you have everything you need. How's that been, working with IOHK, Charles, et cetera?
Yeah, they've been good, actually. I mean, we go through Catalyst for grant funding, and that's been its own beast. And the decentralized governance for Cardano is like really starting to get very competitive, and like you can tell the community is ready to meet IOHK in many places, like in the middle, and there's like a real grassroots bottom up kind of movement taking place, and it's super exciting to be a part of. Catalyst is more fun than my day job, I'll admit it.
Man, actually, I saw you on Catalyst. I saw one of your proposals, and I was sending it to my business partner the other day with Grow Your Stake, which, by the way, anybody that's watching, please feel free to contribute to Grow Your Stake. You could delegate your stake there to help us out. That's what's sponsoring this show, which is Cardano Chats, where we're going to be meeting and talking with awesome people like Dewayne. But yeah, man, I saw your proposal, and I was trying to send it over to my business partner. And then I went back looking for it, and I didn't see it, but it was brilliant, and you had tons of votes. It was I think your most recent proposal, is that still in play?
Yeah, it's still in play. The voting won't start until, I believe, like March 5th or 6th or something like that. But yeah, we're excited. We have two proposals right now. One is to basically build out an SDK for the Solidity, side of our code base that's going to launch on the KEVM. We've actually already started on some of those SDKs for the yield farming contract, for example. The other one is just like a continuation of building out the Liqwid protocol, everything for the front end, back end infrastructure, smart contracts that we're working on. But yeah, it's getting really competitive. Fund 4 has already started, so they're already like in the next round. Even though we haven't, started the voting for Fund 3, it's kind of like they're like stacked on top of each other almost. So they're like rolling rounds.
What they've got slated in terms of the number of funds for this year and what they're trying to accomplish is, it's intense, man. It's intense, and so much money to flow into this space. Well, real quick, so I know that we got a little off the token for a second. I want to let people know, like, how and when can they first get involved with Liqwid? And obviously, we really want to support your project. I love what you're doing. So I'm going to include links for everybody that's watched this video for how they could stay in touch with Liqwid. I'll get those from you. I think I've got a lot of them. But in terms of like the first action that somebody could take, whether that's staking their ADA on Liqwid and yield farming it or whatever it may be, when is that, and how will they do that?
Yeah, so it's that exactly. It's staking their ADA on the KEVM sidechain and our yield farming contracts that we're putting out, and being able to earn the LQ 10% that we have set aside for the yield farming contract specifically as like a part of our kind of early incentivization program. We have a Medium article where we kind of highlight how the yield farming system is going to work in terms of its epoch breakout, how much LQ is allocated to each of these different systems, whether it's the user distribution over a 2-year period versus the shorter term yield farming over a 6-month period, and kind of some of the thought and insight behind why we did it and set it up this way. But essentially, yes, the first opportunity that users will have into the system is this yield farming staking contract that's going to go live on the KEVM at some point early March. Early April.
Early
April, yeah.
Early April. I guess you'll announce that via Twitter or.
Twitter is the best place to find all of our announcements, and our Discord. That's where we're putting out all of our official things. If you're following at Liqwid Finance on Twitter, you're in the loop. You're good.
Absolutely. Okay. And I'll definitely make sure to get that information into the links below.
More importantly, though, I want to say there's dependencies here, right? Like we need like a blockchain with smart contracts. Like we need like certain things that are not currently in existence. So like these are not hard dates by any manner at all. So don't take them as such. And that's kind of something that I need to caution everyone with. It's the same as like, the question on, are you guys going to allow this like really cool feature that like everyone wants? Like, I agree. I want the same feature, right? But like part of this is like working with IOHK to like see how realistic and pragmatic are these timelines.
You have, I think,
right? Like it's
if anybody is really following what's going on with Cardano, that in and of itself is incredibly impressive. The amount of releases and what's coming out this year. So to not understand that you have a complete, you've got a lot of dependencies and you're working with a platform that's quickly evolving, that's got to be incredibly challenging, I would imagine. Yeah. So I'm sure we could give you some grace, dude.
Well, you asked an interesting question earlier. You said like, how's it been working with IOHK? And our devs have actually like sat in on every single one of the weekly DevNet calls with IOHK. And actually shout out to Ben O'Hanlon and, shout out to Vuk as well, the IOHK product manager. Like, these guys are really transparent and they field all of our questions, and sometimes we're asking things that are super technical and sometimes things that are kind of private that they haven't even made public yet. But these things help us streamline in terms of how we're thinking about development, what needs to come in what stage, and what functionality is kind of ready today for us to pick up and run with. So I think that, being able to kind of get that insight directly into some of the IOHK devs has actually been a really huge process. And I recommend anyone else who's building a project on Cardano to start attending those weekly DevNet calls, because it's going to help your developers out a lot when they think about the different Cardano components that they need to touch and where they are in development right now.
That's awesome. Is that a link or some information I could get from you that I could put in this video text as well?
Yeah, there's a Slack channel that
okay.
I have, and I can share that with you.
Yeah, I'll get that from you. Man, so speaking of Cardano, what you had, I mean, gosh, there's so many smart contract platforms. You had a choice, right? There's Ethereum, there's who else? Polkadot, there's a lot of platforms, a lot of different platforms you could have chose to launch this on. What made you choose Cardano?
Yeah, I mean, so there's several reasons, right? Ethereum was never really an option. The fees on Ethereum kind of make it not really something that is really pragmatic for people who actually want to build a system that's inclusive enough for anyone to just pick up and use. Mm-hmm. So Ethereum really wasn't an option. All the other kind of Gen 3 blockchains out there, and there's a ton of them, like the layer ones, Solana, Avalanche, Polkadot, like you mentioned, Tezos. But at the end of the day, all of these blockchains are trying to be bits and pieces of Ethereum, whereas Cardano from the start has said, hey, this is the beginning of a new paradigm in how we're going to do on-chain governance, how we're going to do digital identity on-chain, and how we're going to do smart contracts, right? And and also just how we're going to research and develop a blockchain, right? And those three things show massively. For one, the staking user experience and the simple features that you can build out around the fact that staking in Cardano is actually such a simple UX and does not actually lock the token. That's huge in terms of the liquidity of ADA, the Babel fees, being able to pay in native tokens, right? And actually having SigPool operators be able to be mini Uniswaps, essentially, right?
Right.
That's a whole nother business model and avenue that no other token will have, right? The Atala Prism level, the government partnerships, when those come in and start flowing, post Goguen, right? All of these things that you are going to, in somehow, some way as an application or dApp on Cardano, get access to natively. You're not just going to this doesn't come as part of the package on other blockchains. So, all of those things we weighed, as well as, some of the trade-offs, right? I'm honest in telling people on my channel, hey guys, we actually, we're still halfway with our Solidity development, but even if we had a full developed Solidity code base today, yield farming contracts audited, ready to go, there's no KEVM sidechain to launch them on, right? We're just not there yet. So we need a couple more weeks, a couple more months for the devs to kind of iron out these last things in terms of connecting these blockchains to them, to the Cardano main chain to actually create a sidechain. Right now, it's just a floating network, right? We need to create a way to incentivize the KEVM so it becomes a true living version of the EVM and not just this science project that IOHK is working on, right? And I'm not trying to be rude here. I'm just saying we have to be balanced in our approach, because otherwise you're outpacing or underpacing, right? And you always want to be you mentioned something really keen just now. We are trying to keep up with a firm that IOHK that's always constantly, quickly iterating and moving on these things. You have to keep up at the same pace as them, or else it's always just going to be, underpace or overpace. And that's just what you don't want as someone who's building a protocol that in many ways kind of sits right on top of Cardano.
Right.
So yeah, it's a steady balance. It's a nice dance that we've been having for the last couple of months.
Yeah, I bet it is, man. And honestly, it's ambitious enough what you're trying to do, launch right now at the same time. So much of this is unfolding. But I read through your introductory series and actually just about all of your content, at least everything I could get my eyes on, because number one, I'm fascinated with it. But number two, I needed to prep for this call. I think you said something that I'm pretty excited about, and it's the liquid ramps. There were a couple features that I'm pretty excited about, but the liquid ramps seem incredibly genius at possibly creating a bridge for CeFi to DeFi, creating easier scalability or easier liquidity. I don't know. I'm curious, like what made you think of that, and tell us more about the liquid ramps.
Sure, that's
what
a
they
great
are.
point. Yeah, that's awesome. I like that you brought that up. So liquid ramps is kind of like a play at, like, if you've ever heard of the Dharma app on Ethereum. Essentially, it's like a DeFi to CeFi gateway that sits in like a wallet app that, again, I can just download from the App Store, connect my debit card to, and essentially like have the liquidity to buy or sell all of these DeFi tokens, that are just like kind of up and coming on Ethereum. So yeah, Liquid Ramps is a play at Dharma, but just built on top of Liquid essentially. So like whether we'd have to white label with like one of these exchanges that could offer a service like this, or whether we'd need to build API connections into their system, or if we can actually just like use the Babel fee system from Cardano, work with a couple stateful operators to build out our own kind of like, custom deployed Dharma almost on top of Liquid as like this hybrid system, where we're part relying on the stateful operators to provide the liquidity in terms of the liability, all these other native tokens that they're holding like LQ, right?
Right.
And then be able to kind of create that fiat on off ramp, having something like a simple payment gateway, the ability to kind of tap into liquidity protocols like Liquid, or the Uniswaps of the system that get built out. These are kind of like what Liquid ramps can be, and essentially it's saying like right now I recognize that what we're building on Cardano, it's great for someone who's already into Cardano and into crypto, but it can be seen as like a closed ramp or closed loop system right now, rather, because like you have to have crypto to be in this system. And like,
right,
we're talking to, development partners who are not in, or, even like enterprise partners who we want to integrate with, they're not in crypto, right? They're not in blockchain. They're operating in like the traditional finance or the CeFi world, right? Like, so you have to be able to kind of build ramps into their system where actually like a lot of liquidity, data, identity, 99% of the world lives and does business.
I think it's brilliant, and I think it has incredible potential. So if you guys are able to pull that off, that's huge. I didn't quite get how and I've just recently started seeing the Cardano Babel. What is that, and why is that relevant to Liquid Ramps?
Right. It's not, I mean, it's relevant to LQ and all the other governance tokens or native assets that get minted on Cardano, right? Because it's saying you can pay for transaction fees on the Cardano blockchain in a native asset that a stateful operator deems like, worthy enough, they're bullish enough, they want to hold that token, that they'll actually take out a liability on it. Basically, like they'll create a small balance sheet of, assets and liabilities where only ADA can be used as an asset. And they can actually collect these other native assets that they would like to hold as liabilities and actually create markets on. So you can swap in between ADA and these other tokens, kind of like a mini Uniswap. Essentially, these pools, they're now going to become their own little dexes, and they decide, maybe through governance, maybe through marketing, because you can set up something like, our pool, accepts LQ transactions. So now some of your delegators receive LQ each epoch. It could be a really nice way to kind of diversify your income streams.
Sure.
And kind of, set yourself apart, especially if you're a larger stateful operator who you already maybe have 1 to 2 fully ADA pools. You set the third one as like maybe a pool that collects LQ and maybe all the other DeFi tokens on Cardano. And then now you offer, your stakers and your pool 3 this kind of diversified income stream of all DeFi tokens on Cardano, something like that, essentially.
Yeah,
the way it's going to work, I don't actually know how it'll be implemented. I do know that on the front end, I don't think the users are going to see a difference between ADA and the native token because of the way that they're going to abstract it away with the UI. But it's going to be interesting to see how the stateful operators are able to kind of control that, set that up, introduce like a fee, put a UI on top of that, like truly like build out their own little mini Uniswap. It'll be really interesting. I think it's going to build out a whole different like business model and scheme in Cardano. I think it's going to be really competitive. We'll see.
Yeah, that's fascinating. I remember hearing some about that, and it's brilliant. And it's definitely something that we're looking at with Grow Your Stake as well, which is our stake pool. But yeah, very cool, man. So we're pretty into the conversation. I'm very curious, like, what kind of challenges do you have going on right now?
Yeah.
And how are you solving them? What's happening? What's your status? What's the status of Liquid Finance right now?
The status is like heads down in development. Like
Sure.
we're building out our yield farming contracts. Like in March, those will be finished, enter testing, QA. Try to get into audits by the end of March, for that early mid-April launch. So there's a lot that comes with that though. We're building out an entire basically Solidity code base, a wallet solution for the KEVM. And in addition, we've just hired our full pro Haskell team that's going to build out all our Plutus contracts for us. We're working with them as well to get them, taking our Solidity code base of contracts essentially and transforming those into a Haskell, data structure for Plutus essentially. And that's, its own kind of beast that's going to take a few months of development and kind of real time and energy kind of focus on that alone. But essentially, I think that February was a really good month because we stood up, our front, back end and infrastructure. Our security is all complete at this point. We're going to introduce with this early yield farming product, and essentially it's going to be using the KEVM and Solidity to help us start the distribution of LQ, right? Even though like LQ itself will be a token living on the main chain, because users will be able to send their main chain ADA to this KEVM sidechain using a UI that IOHK develops for us, and the MetaMask like wallet that we build for the KEVM. Essentially, you'll be able to deploy this kind of mini DApp for yield farming of LQ on the KEVM while we complete our Plutus smart contract development and kind of get ready for that official launch. I think it's like late June, probably, at some point. And that's kind of what we're looking at right now in terms of our timeline. But yeah, we're on pace. We're just heads down in development and
Sure.
kind of trying to get things shipped. But yeah.
That's great, man. I know you've already got a significant community of people supporting you and what you're doing and that are excited about it. Maybe a lot of that started back in the Wyoming hackathon that you guys won. Who knows? I guess that's kind of the beginning, somewhat.
Yeah.
Okay.
Totally. Yeah, absolutely. We definitely were lucky to compete in the Wyoming hackathon and actually get hands-on like Marlowe experience, because it really paved the way for what we're trying to do now in Plutus, actually. Just because
Sure.
It's in many ways kind of built right on top of Plutus. But
so does Marlowe not solve the problem? So I was curious about that, because I noticed that your project was in Marlowe that was done on the Wyoming hackathon that you won with. And are you going to be utilizing Marlowe, or was that just somewhat of a bridge to get to Plutus, or
Yeah, so that hackathon challenge was specifically to build a solution in Marlowe. And what we did was actually took the Marlowe source code, built out in the TypeScript front end and the Haskell data structure, some extensions to allow us to actually do things like minting and burning of the tokens. But really, that was just a proof of concept set of smart contracts.
Right.
Like, we wouldn't actually build the entire protocol on a DSL like Marlowe, just because we need something a little more expressive to do some of the things that we're kind of implementing with Liqwid in terms of the peer-to-pool model that we have. Marlowe is really good for like a peer-to-peer one-to-one model, like,
Okay.
Like renter, kind of, rentee agreements, very good for Marlowe, right? Like these type of things that are kind of like really one-to-one or maybe like one-to-two type of agreements are where Marlowe is going to have like a huge early win, I think. Complex decentralized protocols like Yearn, where you're doing things like swapping and lending and maybe even insurance coverage, things like that, or even something as like, like a compound where you're like, or a Liqwid where you're just doing borrow lending. I think that those use cases, because of the complexity, the type of libraries that you need to introduce in terms of safe math to do some of the arithmetic in those protocols, you won't be building them in a DSL like Marlowe. You'll be using like just the actual, Haskell language, which is Plutus.
Sure. Okay.
Plutus is, all Haskell. So yeah, that's why we're. But again, Marlowe gave us a lot to learn from. It is like partly Haskell. Like I said, it's built right on top of Plutus. It compiles down to Plutus, actually.
Yeah, it's
so
more of a framework, right? So it's
right.
more of a framework, and then Plutus has, full expressibility or full, everything you need is what that kind of sounds like to me. The non-developer guy.
No, that's true. That's correct. But I don't know. Maybe we'll be able to use maybe Marlowe for something like oracles. There could be a potential. I actually don't know how. Like, it could be really cool to see how we integrate a really like specific template contract from Marlowe to do maybe something like oracles in our system from Wolfram or something like that. But we'll see. We'll explore that still. But yeah, we're definitely heads down right now.
Sure, love it, man.
Yeah.
So where do you see Liqwid Finance in 5 years? What happens with the project?
Wow, that's 5 years, half a decade.
2 years, 5 years, 10 years. Let's just, yeah. What's your vision?
I'll do 2 years first, just because I think that we have our user distribution and our even fair vesting as a team is set for 2 years. So from the launch of our official, V1 on Plutus, a 2-year period from then will basically be us trying to build liquidity on the protocol, us trying to build integrations into other, third-party apps that may or may not even be in blockchain and, doing DeFi related things, but might be more related to like retail credit scoring, retail digital identity across places like sub-Saharan Africa and India. Like these are places that we really think a lot about, and just like rolling out specific products, meeting with developers in these ecosystems and regions and saying, hey, like, what does it take to have you guys build out the future layer 3, layer 4 protocols that are going to live on top of like a liquid open source lending protocol on Cardano, right? And incentivizing them to do that using things like LQ, using things like, ADA and the Catalyst mechanism, right? So that to me is like what the next 2 years entails. Definitely trying to like distribute the governance of the token as much as we possibly can, especially to the early users of our system over the course of the first 2 years. And that all starts again with the KEVM mill farming and kind of continues throughout with the user distribution mechanism and the DAO treasury that we get as a native, token on Cardano is in many ways just an extension of, empowering the community to build out solutions on top of Liqwid. So I definitely think like the first 2 years will be, a lot of definitely iterative improvement, definitely integration into other existing apps that have, definitely synergistic products when you look at what Liqwid is deploying and what some of these other kind of existing fintech companies have done in the space. So yeah, I'm excited about that. I'm really excited about getting a Teleprism and a digital identity solution into Liqwid.
Oh yeah, there's your credit solution there, the L credit or the Q credit.
To me, yeah, right, exactly. And to me, you can't even like talk about credit until you really have a sound method to talk about doing digital identity, obviously. And a Teleprism gives you that out of the box with Cardano. You don't have to build that yourself. And like, again, you talked about, why Cardano over some of these other platforms, like, Liqwid, and, and we can talk about the 5-year vision now. Like, we're not trying to just compete with like Compound and Aave and these other DeFi protocols, like, and respect, I tip my hat off to them. They've locked up, $5-6 billion in some of these systems. Like they've definitely proven the tech of Ethereum, and they're a success in their own right. But we're trying to compete with OPay, right? Like, I want to build a system that any Nigerian, anyone across India or Southeast Asia can pick up and use, essentially never having to go and enter a predatory loan or having to go and enter, one of these kind of, variable high interest rate, or even use a congested, unscalable chain like Ethereum to do simple things like lending that should cost $2 or $3 at most and pay $200, $300 transaction fees. So that actually is like, the long-term vision. It's way past just Ethereum, but it's actually like, it's like there's Ethereum DeFi, and then there's like the OPays and fintechs of the world that actually dominate how, kind of Web2 lending is done in the world today. Right. And if you can compete against what these payday lending schemes, you've actually entered a whole different market of opportunity. And it's far beyond just like what you see in Ethereum DeFi today. So that's like,
yeah, that's great. Vision. That's a whole new level of scale. I mean, DeFi hasn't even begun. And when you talk about that kind of scale and that kind of value that you could bring to people, it's enormous. And that brings me somewhat to my next question, which is just, what you're doing with Liqwid Finance and Cardano's mission of bringing economic identity to the billions that don't have it. It's very aligned. Like I really see the two working really well together in terms of mission. I don't know if you would agree with that or what you would say to that, but like, what do you most want to accomplish with, with Liqwid for the people, or for who?
Yeah, I mean, there's several things there. I think that, my family is from Jamaica, and, we have family from the Caribbean, and we definitely see the same exact issues that like our co-founder, Josh Akpen, who's from Nigeria, they deal with today when they use the OPay lending app and they have to, pay egregious initiation fees or, variable transaction fees and kind of terms of their agreement that end up making them pay whatever, 300, 400% APR on that loan, right? Like, we're saying there's a better way to do these basic banking functions like lending and saving. And the means to do that is definitely going to be through these decentralized open source protocols. And we've definitely seen kind of the rise of the compounds and the Aves. And it's because they offer you the same solution as Celsius, kind of without having to give your tokens over to a Celsius, right? Like, you are your own Celsius when you're using Compound, essentially. Yeah, the yields might not be, as amazing, but like, when you talk about like a power user in crypto who actually doesn't want to hand over the ownership of their tokens, but rather wants to trust a software protocol like a smart contract to execute everything according to the rules of the system, right? Like, this is why we're seeing the birth of these systems. And I definitely think there's like a place for every single user, because like for some people, Celsius is definitely good enough. Like, for some people, a bank is exactly what they want and need. I don't know for who those people are, right? But for some people, like, if using a centralized like middleman to do things like borrowing and lending and savings, like, if that's like what your safe and your risk level is, totally understand. But Liqwid is saying, if Cardano is going to try to reach a global user in terms of providing an economic identity for a global user, you have to talk about a lending market that's decentralized and open for anyone to access in the system, right? That has to be at like the base stack, along the Uniswaps, along the, the insurance protocols and the robo advisors, the asset managers. All of those things are kind of like the base, DeFi stack that you have to have in your system if you're going to go to government XYZ and say, hey, come integrate with Atala Prism, come use this gateway into the Cardano public blockchain. These are all the financial services that you'll enable your users to access, right?
Right.
And like, what is the incentive in play there for new users? Like, it's escaping like the opaqueness of the traditional financial system. The fact that it's like super exclusive and 2/3 of the world is left out of that market entirely, right? And it's replacing it with something that's like 10x more efficient, 10x less cost, right? Like, more actually inclusive for the everyday average user to just pick up and join, right? All you really need at this point is your Roy wallet to actually engage in any of these DeFi protocols on Cardano. And you compare that to like what you need to like set up a bank account, get with the broker and actually be able to get exposure to some like US stocks, right? Like, it's totally going to knock the way we do traditional finance, to me, on its head. But the most kind of key point, which we haven't really talked about because it's kind of tangential to Liqwid, it's this like data monetization play, actually. It's this idea that the reason that you're going to see so many retail users opt out of the Web 2, traditional finance, CeFi world into this, DeFi kind of public blockchain system is because they're going to get to keep all of that data that they're producing in this DeFi world, in addition to all the yields that they're earning, right? All of that data can be put on a marketplace, can be sold, can be traded, can be packaged in many different ways. And actually, the owners, right, the users who are creating that data with these transactions that they actually themselves, create on all of these protocols, they're the end beneficiaries of this. They're the ones who can use things like Atala Prism and ZK proofs to sell parts and pieces of their data to the highest bidder, right? Using things like, the GDPR laws and regulations that make these things actually mandated for third-party data market places and players who want to access this type of data to kind of go through into the future. So Ocean Protocol on Atala Prism is not that far away. Once you have that, any user who's using these DeFi protocols, on the borrow side specifically, right? I come into Liqwid, I am able to actually, through showing my transaction history, prove that I'm a borrower who's able to not get liquidated, essentially not default to my loan, right? Repay my loan in time or, on the same terms and not get liquidated in the system. Why can't I use that exact same, history of transaction
to reduce
in a CeFi app? Just use anyone who basically trusts that Atala Prism is a gateway into Cardano and trust that this DeFi protocols and this transaction on the Cardano blockchain is saying I repaid my loan and didn't get liquidated. If it's a real estate, if it's an auto loan, it doesn't matter what it is, a mortgage, right? Like, you can use that in the real world to attest to things and get better rates and better terms on a financial agreement. But you created all that data in a DeFi environment, right? And that's just one example, right? Like, So there's that whole play that I think is really going to come through Atala Prism. And I don't even know if we understand how big that will be for Cardano, because it's essentially never been done before in Ethereum. Like proof of concepts, yeah, but like never at scale.
Right. Yeah. It's just another bridge to get into, kind of a merging of the CeFi and DeFi and get more use cases and more scale, and provide more value, man. So that's great. I love that you're thinking in that direction. It's incredible what all you've accomplished so far and what all goes into your plan. And honestly, man, I'm really grateful that you took the time to answer some questions. I know that you're probably incredibly busy, and so it's not exactly easy to squeeze time out. So I appreciate that. And we definitely are going to be a voice for you in the community. And we're in full support here at Cardano Chats and Grow Your Stake of what you're doing. And so you can lean on us however you want, but we're definitely going to be shooting the word out about what you're doing. And would love to have you back on the show another time as well, man. It's been great talking to you. I feel like I learned something every time. And, it's the second time I've talked to you, but, you really know the space well. So thank you.
No, Josh, this was great, man. Thanks for having me on. And this is the first episode of Cardano Chats too, right?
It is. Yeah. I didn't even mention it. Yeah.
This is awesome. Great way to kick it off. And yeah, I was going to say, happy to come on again. Like, maybe when we launch yield farming, or maybe before we officially launch on Plutus or something, and can come on, explain, maybe even share my screen or something and show you how you can use the yield farming contract and how you can actually interact with the protocol. I mean, we'll definitely produce a lot of that, content aside on our own as well, but just to come back on and kind of
absolutely
direct viewers, I would be happy to do that. So
and we would love to have you, man. Consider that an invitation and a plan. So let's just lock it down when you have a little bit more clarity of what's going on there, man. So 100%. Thanks again. And we'll look forward to talking to you soon.
Thank you, man. Thanks for having me. Take care.
You bet. Bye-bye.
Okay, thanks for watching Cardano Chats. Again, that was Dewayne Cameron with Liqwid Finance. That's liquid.finance. If you want to check them out, liqwid.finance. Also, be sure to support us at Grow Your Stake. GYS in your Daedalus or your Roy wallets is what you have to type in to find our stake pool. And last but not least, we got more projects and more cool people coming your way soon. Take care.